Hey, my YouTube friends, welcome back. Today we're going to talk about three small cap AI stocks, BigBear.ai, C3.Ai, and ACMR. If you're interested in any of that, don't miss the content in this video. C3.Ai gets a lot of attentions and hypes over the past few months. Since this company has AI as its ticker, it has to have something to do with AI, right? And it has to be benefited from this AI boom for the past 1 year or so. We've done videos before explaining C3.Ai's AI applications, its solutions, its AI platform, including like developer tools and also like C3.Ai's new attempts in the generative AI industry. It has adoptions from big companies like Microsoft and Google, but it's not like they have some like exclusive technology that only they can offer, and Microsoft and Google are like really relying on these technologies. And recently I read this article about C3.Ai. It's an analysis to this company and to the stock from Olive Redizenko. It's a pretty good article for us to like understand the situation of C3.Ai as of now. And he claimed that C3.Ai from its stock price and market capital is undervalued, but it also will face profitability pressures. And it explained why currently C3.Ai is like undervalued, but he still thinks that makes sense in some extent. One big reason he gives is that C3.Ai has a very strong competitor like Palantir. He believes investors will have reasonable long-term returns if they invest in C3.Ai now, but he also does not expect those to be higher than Palantir's. So basically, he thinks investors will want to consider the similar risk-reward profile of both companies and then assess their higher growth prospects of Palantir, because both investments carry somewhat higher risk than other established players or companies. His own preference is to choose the allocation that may provide a significant amount of outsized growth as a result, in his context, the Palantir. And then he also gives analysis on like C3.Ai's flagship product, the C3.Ai Suite. He thinks these are like crucial product and service set, but he's like not sure how unique the offering is. Then coming into the financial analysis that C3.Ai is not profitable. Quote, I believe this provides investors with somewhat of an opportunity because it is usually when companies begin to report stable earnings that the wider stock market begins to take notice and push up the company's valuation. However, it also comes with a set of risks that makes me skeptical about allocating significantly to the stock. C3.Ai has a roughly 2.5 billion market capital, while Palantir has a 47 billion market cap. Therefore, it is not unreasonable to say that C3.Ai has a lot of catching up to do, considering the problem is as immediate as the gross margin for C3.Ai. It likely has a higher purchase cost for product and service development because it is purchasing at a lower scale. That's fair. And in addition, it does not have the same full stack AI and data services that Palantir has. That's some like key information that Palantir has provided a more like a full stack AI integrated solution than C3.Ai, and C3.Ai has higher cost and in providing the same service. And summary. So in his summary, he thinks although the stock offers good value at this time, he believes investors are more likely to have higher total returns from an investment in Palantir over the long term. So what I want us to take a look at the quarterly and yearly financial results and compare it year over year of C3.Ai. And as mentioned in that article, that C3.Ai is still in a net loss territory. It's not like profitable yet, and it looks like if we compare the 2023 and 2024 data, the yearly net loss is increasing, even though the revenue is increasing like 10-20% year over year and 20-30% quarter over quarter. That reemphasizes that the increase of the revenues comes with higher cost of having those revenues. So quick conclusion, with the AI boom still going on, there's hypes there, but it's kind of fading. And the fundamental of C3.Ai is in serious competition with other companies and other players in the same domain. If the stock price of C3.Ai can go down further, maybe there's a better opportunity to pick some of C3.Ai rather than now. Okay, the last one, ACMR. ACMR is like Zach's ranked #1 strong buy top pick of the day. So what does ACMR do? ACMR develops, manufactures, and sells single wafer wet cleaning equipment for enhancing the manufacturing process and yield for integrated chips. So it provides technology to those manufacturing. ACMR holds some key technology that helps these manufacturers to enhancing and to improve their manufacturing process. So ACMR was founded in 1998 in Silicon Valley. ACM Research develops wet processing technologies and products for semiconductor industry. The company has produced equipment for a range of applications in IC manufacturing and wafer level packaging, with a special focus on cleaning technologies for advanced semiconductor devices. In September 2006, ACM expanded its operations into Asia and formed the subsidiary ACM Research Shanghai. And ACM now has complete R&D, engineering, and manufacturing operations at its Zhejiang High-Tech Park facility in Shanghai, China. In June 2011, the company formed the second subsidiary, ACM Research Wuxi, to better serve its customers. After some further investigation, we know that ACMR is not directly working with those super large IC manufacturer like TSCM or working with Nvidia or AMD, but it would rather has like 76% of their 2020 revenue generated yield from mainland China. And it also has the South Korea chip Innovator yield about nearly 10% of their sales. It looks like ACMR's target customers or partners are not those super high-end IC manufacturers, but would rather in general IC manufacturers that provides the relatively basic, wide-ranged IC chips, including some of the middle tier or low tier AI chips. It's definitely a profitable company, and the PE ratio is not high. And if you look at the recent 3 months or 1 year stock growth, it did grow from about around $10 or $9 to a high of more than $30, now sitting at $27. So it definitely has growth potential. However, many of the AI chip makers and AI related companies have more than these growth. So how the stock price goes is not like super exaggerated for this company, but still we can see some like stable, steady growth of the stock price. So based on all of those research, I would give ACMR a small bet score. So I would give it a buy rate and the volatility score of 2, and the max the portfolio percentage I want to hold the stock is 10%, and the willingness to trade is 3 for now. For C3.Ai, BigBear.ai, for me personally, it's not a good time for me to trade the stocks. If C3.Ai stock price goes down, goes lower, maybe there's that opens an opportunity in the future. But for now, no. ACMR, there is some temptation to trade the stock, or rather like invest in the stock. But as I mentioned in my previous videos, there are better opportunities, trading opportunities for me. I think the hype and the growth with Nvidia is still there. There are quite a lot of interest into the stock, into this company. And there are many people who didn't get the chance to jump in the stock, multiply the growth of their portfolio, or like keep a close eye on the stock. So whenever Nvidia has a significant drop to like 700 territory or the low 800, I still think that's an opportunity. That's a very good opportunity, and that's what I did. And for stocks like Nvidia, it's safer to trade a little bit more than some of the small cap AI stocks because they're just so volatile. So yeah, that's all I want to share in this video. If you like this kind of content, if you're like looking into investment into AI stocks, please consider to like this video and subscribe to the channel. I'll see you next time.